The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off just after 9 a.m. Eastern Time, 24 minutes to go until the start of trading. We got a little bit of jobs data out there. ADP, private payrolls, 22,000 added in January, far short of expectations. The total was less than downwardly revised 37,000 increase in December. So you go 37,000 in December. We go 22,000 in January. The number they were looking for was 45,000. So we get that number this morning. There's a little bit of the volatility following that number. And right now you got the S&Ps basically flat. NASDAQ 100. We got some earnings. You got AMD down dramatically this morning. You're trading at 218 from 242 last night. We jump over to NVIDIA shares, slightly in the red after quite a day yesterday, but the NASDAQ 100 right now down about 0.5% off 120 points, 25,332. The Dow up by 0.1%, up 62 points, 49,413. We jump over to yields. And yeah, no reprieve whatsoever. You got lower price, higher yield, the 10-year, negative by 3 ticks right now. You're talking about a 10-year yield right near 4.3%. We're at 4.29. 4.29% on the 10-year. The market just not believing we're going to get the type of cuts and that they'll translate to a 10-year basis. The dollar chopping around 97.52 right now. We jump over to metals. Quite a bounce. Gold now $650 off of the lows of early Monday. 5,070. Gold up by $135. Silver right now up $8.35, up 10%, 91.69. You take a look at the daily. Quite the acceleration on Friday. Monday's deepening pullback on 163,000. We bounced yesterday on 123,000. Okay, it's the lowest volume day going back to January 22nd. So we'll see if we can get some follow through today with some volume. We're at 46,000 contracts on silver. You're at gold right now. Similar in terms of look at the volume on the acceleration higher even. You pull back and yesterday's bounce 251,000 contracts in gold. You jump over to platinum this morning, participating in the acceleration. Same thing on the volume of yesterday's acceleration, though. Platinum, you do about 23,000 contracts. Platinum's up 3.5%. We jump over to copper, down by 1.25% right now at $6. Okay, and AMD. So AMD with earnings after the bell last night. It's been quite a run from 75 up to 242, and we're going to open at 218 right now. Okay. Take a look at the daily on this thing. Quite the selling going into that with the market yesterday. And we'll talk about it in the program, but pretty remarkable. You get an announcement from Anthropic that they can help deliver legal tools, and the market flips out. Like, what is all the investment about if we're not going to get into areas like that that are ripe for automation to take some of the services revenue away from some of those companies when they're going to be able to complete those tasks? Pretty remarkable acceleration yesterday. All right, we jump over to AMD. So how about $10.27 billion in the fourth quarter? The market was looking for 9.67. It expects $9.8 billion in revenue for the first quarter versus $9.38 billion, but some analysts were looking for bigger guidance than that. So it's all about expectations. They announced they shipped Chinese revenue in the quarter that was unexpected. So that was not in the street numbers. Okay, so the numbers you're seeing, right? The street wasn't putting some of that Chinese revenue in. They were so under where they wanted to be that they included the Chinese revenue. So when you account for that, the beat was far less substantial than we would have thought. So it's a big miss. They've been on a heck of a run. We jump around some other equities with their numbers. We got a lot of numbers, man. You jump over to Uber. Now, Uber was trading lower. 20% revenue growth. I mean, some of these numbers, man, just to give you a quick idea of the expectations of where some of these equities are priced. Uber reports 20% revenue growth in the fourth quarter, fueled by food delivery. We'll jump back to that article in a moment. Okay, we're back to flat right now. And okay, what do they got going on in the conference call? I was watching it early this morning. They put out those numbers. I saw the headline. You're back to basically flat, but boy, that was an initial rip-roaring decline. The company is more convinced than ever that it's a multi-trillion-dollar company, according to their CEO. Well, what else is he ever going to say, right? Revenue, a slight beat. Earnings, 71 cents. Pretty remarkable. In 90 days, 14.37. They do $12 billion a year ago. Imagine that. They had $2.4 billion in revenue, and they were only doing 14. Just a mammoth number. But that's what priced into these equities. Net income, $296 million. Gross bookings, $54.1 billion. Man, what are they doing? $600 million a day in gross bookings? The market was looking for 53.1. Gross bookings increasing 17%. But yeah, this thing has been on a tear. All right, coming right back into those December. You know, it's been a heck of an uptrend channel. Put this thing on a monthly. All right, we've had some selling, but on a monthly basis, nothing too pronounced. Look what we're coming into. You had that nice acceleration in May. That was their May earnings of last year. That's not the April lows. You got a low out there, 80.12. We're trading at 78 on Uber. Yeah, Yum Brands. Taco Bell. All right, right now, you got a bid ask around everything. They're out with their numbers. Taco Bell, though, the highlight there. Same store sales increasing 3%, fueled by big numbers at Taco Bell at 7%. How about that? Same store sales, 7%. Big numbers, man. The market was looking for 5.6, and they beat it. KFC's global same store sales rising 3%. Just big numbers. Yeah, Chipotle. So, watch out for Chipotle, folks. Oh, you're catching a bid. But boy, obviously. So look at this. Right now, we're down about $1, okay? This equity's got a problem, folks. Even 90 days ago, you accelerate on volume. You had a nice sign of strength. That was options expiration in December. But since then, and you look bigger picture at this thing, man. You break below here, you're going back to $10. You're at the top of this consolidation you spent almost 2 years at, from 2021 to 2023. And in reality, folks, they got a big problem. Okay? Earnings, they barely beat. Revenue, they barely beat. Same-store sales fall 2.5% in the quarter. Yeah. Third quarter of the year with same-store sales declines. However, they were thinking that they were going to fall by 3%. Traffic to Chipotle fell by 3.2%. And I'll tell you, I used to love Chipotle. Okay, a lot of people did. And they're not, going bankrupt. But it's a different world, man. The price of a Chipotle bowl, and if you even think about adding it getting delivered by Uber Eats, highway robbery. Chipotle down $1. We got a lot more to cover, folks. We'll talk some interest rates. We'll talk some Fed. We got Teddy Kegstack coming up at 40 past this hour. We'll talk some currencies as well.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We get the S&P is up by 3, NASDAQ 100 slightly in the red. You get AMD trading lower by big numbers, Chipotle $1 in the red. And jumping back to Chipotle for a moment, before I get to Lilly coming up next, that's exploding higher. 6 out of 10 customers, after looking at the data, 60% of their core users are over $100,000 a year in income and average household income. And they're going to lean into that category. They opened 132 stores. That's remarkable. That 60% of the customers are 100,000, and it would make sense with where the prices are. Now, the one thing I will say, okay, they introduced, I don't know about the taco, but they got protein cups at $3.80. It's one of the best deals around when you actually go to fast food. It's just a cup of chicken, or you could do steak or something like that. But not often can you actually find things that are just fresh, good meat for under $4 but yeah, you're capped a bit when you're servicing customers that are on such a high end. Where's your growth when you're talking about bowls, rice bowls, chicken bowls? I think of a lot of people that are under $100,000 that serves in terms of the people. And I know there's a lot above it as well. And $100,000, the divider line of the amount of people below it and above it, there's a lot of people above it. There are. The raises, inflation's been dramatic, but there have been dramatic raises that have not kept up, okay? But they've exceeded anything that we ever thought possible. We were raising during COVID, right? Remember, if you were changing jobs, you were making 15% more. You're staying in the same job, you're making 7% more. Those were the wage increases when inflation was peaking. They're nowhere near that right now, but you go up 7%, followed by 5%, 4%, 3%. Before you know it, you're making 20, 25% more than you were prior to those numbers. So, yeah, but $100,000, right, for Chipotle. That's they're now, hey, Walmart talks about it, okay, in terms of the six-figure salary earners as customers. Okay, let's talk about Lilly. Yeah, these weight loss drugs, the GLP-1s. Lilly's working to maintain its dominance in the market. And yeah, guidance comes in. Yeah, Novo's down big time, man. But guidance blew past estimates. You get into it. Adjusted earnings per share, they're looking for $33.50 to $35. Analysts was looking for $33.23. And on revenue, $80 to $83 billion. The market was looking for $77. You jump over to Lilly. How's that for you? Kaboom. Up by like 9-10% on those numbers. You came into the numbers at about 1,000. We're trading at almost 1,100. And we got highs out here of 1133. You know, last time we had volume on this thing on a weekly basis. Yeah, you had some volume at the highs. Look, couldn't quite get above these highs, though. You hit a high of, 1111. You were up 1084 here. You only got as high as 1079 with some volume. You come into the holidays. Yeah, we don't have a lot of selling either. We're going to open at 1085, challenging the highs. Eli Lilly, GLP-1s. And yeah, Novo down dramatically, warns of a sales hit, and they're talking about competition. They're fighting to regain its footing, and the leading weight loss drug maker and fierce competition is what they're talking about. They see sales and operating profit both declining between 5 and 13% at constant exchange rates, facing pricing headwinds, increasingly competitive market. What's remarkable is you think about these GLP-1s, right? How many drug companies are competing? There really should, and I know they vary slightly. My most simplistic understanding of them, they do vary. I'm sure they all have slight variances, whether it's the side effects, the impacts, the statistics in terms of what the data shows for the trials. But if you're the clear and away leader, you should get complete market share, right? Imagine that. There's not a lot of things like that. Drugs are one of them. It's a weight loss drug. What's the best one? That's all people are going to want, period. So you're going to have extreme volatility as you continue. And those numbers continue to come out. Yeah, we talked about payrolls. All right, what else we got going on here? Yeah, this is a good one. Perfect. Okay, the Super Bowl's coming up. The Patriots and the Seahawks. Patriots, the underdogs, looking for a great game. It's been a great NFL playoffs. But let's talk some Super Bowl ads. So Anthropic takes aim at OpenAI's ChatGPT in a Super Bowl ad debut. And you're able to watch the ad, folks, if you Google it, okay? And you can Google it. I'm not sure. I'll try and post this into the den. I'm not sure if it'll load if you got a journal subscription. But the basic premise of the article is that they're mimicking that you're asking ChatGPT things, and it's feeding you answers based on, of course, ads. You know, when you ask it, how do I get a six-pack by the summer? It's going to give you some type of ad-based, content-based, click-based response that they're going to charge advertising for. And the ad ends with, ads are coming to AI, here it is, but not to Claude. That's the ad. Ads are coming to AI, but not to Claude. And boy, the AI experience is a little bit weird enough. You know how it has that flattery effect, that everything is great? Every type of retort is a great retort. You're thinking along the greatest line. You're thinking along this exactly the right way. Let's break it down on the next level, right? That's a great question. I love your frame of thought and how you're doing this. Imagine throwing ads behind the flattery responses to AI. It's a utopian, dystopian version, but it's coming and the battle's on. Imagine, so Claude, you're going to see that one in the Super Bowl. Now, check this one out, jumping about Super Bowl ads. Streaming only Super Bowl ads. So NBC is going to air the Super Bowl 60. It's also going to simulcast it on Peacock. Now, what's pretty cool is you can sign up for Peacock. I think a year is about $60. Maybe they went up to $80 recently. If you go out there and find a code, I'm pretty sure there's 50% off for your first year to sign up for Peacock. So you're getting a year. I think I signed up and I paid about $29 for the full year at one point. And I think that's going to renew at $59.99, and they're probably going to jack up the prices from there. But there are slots. So you imagine if you're on the national broadcast on the broadcast network, it's probably the localities, right? They have certain slots for the local networks. Those slots don't exist on the streaming version of their broadcast. So you have 1/10, okay? 10% of the full ad inventory during the Super Bowl is streaming only spots. And yeah, you're talking about right now $8 million for a 30-second commercial for the regular. And this is a way for companies to come in at a more affordable rate. That's where you get some of these smaller. You're not going to get the Budweiser ads, right? But they talk about whether it's family location safety app, Life 360, right? Streaming only ads. Cowboy Boots brand, Tecovas, they bought one as well. And yeah, streaming is a great way for us to test what's being integrated into such a monumental culture moment. So be interesting to see. I'll be watching it on Peacock. All right, folks, we'll come right back.
You also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps positive by 6. Lilly opens up 7.3% to the upside. We jump over to Uber shares, down by 3% after volatility and bull directions. You jump over to Yum Brands, down by 0.25%. Chipotle, down by 2.5% right now. We jump over the NASDAQ 100. down by about 0.5%. We jump over to some of those chip stocks. All right, NVIDIA down another 1% today. AMD on their numbers down by 12%. Woo-wee. Watch out, folks. Man, you talk about a move. Take a look at this thing on a weekly. Boy, oh boy, look at this gap, right? $160 just hanging out there. AMD down by 12.6% right now. So MicroStrategy down another 4% right now at $128. Back to where you were trading 2 years ago. And Bitcoin can just not find a bid, folks. And if you're in crypto, you better believe that this thing can go down to zero, okay? And Bitcoin's not going away. But you can make the same case as to why it's trading at 75,000 as it should be trading at 7,500, as to why it should be trading at $750. You can buy a fractional Bitcoin. You can still use it for transactional purposes. What's the dollar value of it? Well, hasn't been a good store of value when you look that we are now back below where you're coming into the election. Think what's happened. Think about the friendly administration, the everything going on with crypto, and somehow you're in a losing position. Whew. Jump over to Ethereum, down another 5.1%. And yeah, if you're going to get into these and you're going to have any type of a hodling approach, folks, stay away from MicroStrategy, okay? Let's get into just the cryptos themselves if you're going to get into them, and realize that you're risking everything that you get in. Because you can tell yourself you're going to create a stop, and you can. But the overnight, over weekend, unless you're watching it in perpetuity, what's happening right now, in terms of watching it every second of every day, the risk right now is just monumental. You got lows out here from the April tariff lows of 74,635. We're $300 above that level, and you just got to 73,000. All right, let's talk a little gold. So China gold ETFs see a record outflow as metals slump. Now check this out, man. You're talking about almost $1 billion on Tuesday. Mainland China's 4 largest bullion-backed ETFs saw total net outflows of $1 billion. That marked the second straight day of declines for the ETFs. Yeah, days after you got a record inflow. So flows in gold. Now you jump from there to the bullish side. Fidelity Fund that sold gold before the crash. Well, they say they're setting it back up for another buy, and it's got quite a bid. And you look at some of these buys. This is, you cut your exposure to 3% from 5%. That's how these guys are selling the market to beat the market. Okay, so it's not a monumental step into this market. But for a fund manager of dramatic effects, yeah, that's a big amount of money. Nothing compared to what's going on, though, when you look at the markets, whether you're talking about China and the U.S. $3 billion in income and growth strategies at Fidelity. So imagine, right? You got $3 billion. So imagine this, right? This whole article, the difference from going from 5% to 3% is a sale of $60 million. Not a lot of money, okay? But yeah, they've done well, and he's going to step back in. So it is a position that they're taking. But you're talking about the difference between 5% and 3%. $60 million. So you go from having $60 million. So you get $180 million versus $300 million. He had $300 million. No, $60 million. Yeah, geez, you had $150 million, and now you take it down, he's got $90 million. There you go. Jump over to gold right now. Up $100 at 5,036. We'll see if we can get some volume. It'd be nice to see some more volume than yesterday. At 251,000 contracts. We're at 112,000 right now. And silver, it's only 9:30. We've already done 50,000 contracts. All right. So for earnings, we got a lot of earnings out last night and this morning. And after the bell, the main event of the day is Google. So Google's up by 0.7% right now. Their numbers after the bell. That's your daily. It's been a straight trip higher from the April lows from 140 to 343. Okay, and things have lightened up a little bit since right prior to Thanksgiving. We accelerated at 300. You pushed higher a little bit. We got a little selling at the lows, and ever since the first of the year, we can't get above 100 million right now shares, and in that time, we've traded from 312 to 343. Only thing worrying. You know, Google, I talk about Gemini, but right now, going on with AI, listen, Tommy's aware of, imagine, brand awareness of Google Gemini being an AI agent. Okay, but as we saw yesterday, AI can be under strain, but one of the things that's going to put that whole the entire software industry under strain is going to be Google Gemini. So we'll see what they have today to say today. We make all-time highs just yesterday before you pull back at 350, a nice round number. And yeah, they'll be out with their numbers after the bell today. And then you get Amazon after the bell tomorrow. And Amazon, they got some work to do, man. Just been underperforming dramatically versus their peers. You had a nice acceleration in January on some nice volume. You've just been chopping around in the middle of this bar. So we get Amazon numbers tomorrow after the bell. Today after the bell, back to it, we also get Qualcomm. All right, look at this thing. Some nice strength back there in October. Oh boy, can't find a bid since then. You're right back to this sell-off 66 months ago on Qualcomm. That's your weekly. Let's check out the monthly. All right, October's sitting out there. Accelerate higher. You pull back on lighter volume. Qualcomm's up 2.4% today. We get their numbers after the bell. Yeah, we also get Snap. Look at this thing, man. What's the entire market cap of this company now? $10 billion. I mean, weekly you got some volume up there, but boy, on a shorter term basis, you take a look at that daily. Look at this, man. All right, we got the S&Ps up by 9 points right now. 69.50 right on the dot. We jump over the dollar. You get the dollar trading at 97.56. We're coming back, folks. We're talking with Teddy Kegstad. Always a good segment. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Folks, we got the S&Ps up by 8 points right now. We jump over the dollar. You get the dollar right now at 97.54. And right now, folks, we're going to talk to our man Teddy Kegstad. We talk to Teddy every Wednesday at 40 past the hour. You can check out Teddy's outstanding Tiger Forex report, folks. Comes out Mondays with new issues. Updates throughout the week when warranted. You gain access to a great webinar Teddy did as well. And don't forget, right under the services tab, he's got 2 great webinars. Capitalizing on time with calendar stock option spreads. $97 in Japanese candlestick pattern stock and option strategies. Teddy's written a book on candlestick patterns as well. Check out those 2 great webinars as well. Teddy Kegstad, good morning.
Good morning, Tommy. We've got an interesting day in the dollar index.
All right, let's, we got a new Fed chair nomination since the last time we talked. We got a little action. What do we got going in the dollar, Teddy?
Well, yesterday, Monday, we had a follow-through move off of the rally that started last week. I mean, we have quite a swing low that was set, and yesterday was an inside day, and now so far today, the dollar index is inside yesterday's range. So the coil is starting to get tight, and we'll see which way it springs. I've been talking about divergence for the past few weeks. And it's pretty eminent today. You can see how there's not much movement in the pound. You got some movement in the yen and the Canada. So in certain currencies, the dollar has definitely got a nice little bid. Some currencies not so much, especially when you're looking at the euro, which is also kind of sagging. I kind of like the euro where it's at though this morning. I think that even if we don't have a big move today, it's probably going to be neutral to higher. So you're probably going to see maybe a little bit of a pullback in the dollar index and probably in the dollar as well today, over the course of the day.
Nice. I got a couple questions for you in the Tiger's Den, and I love how, folks, check out the Tiger Forex report. You do such a great job, Teddy, breaking down the individual pairs. People always focus big picture, and they want to hear the dollar, but you do such a great job, and I know you've been talking to us about some of those individual pairs, and it not just being the basket. But in general, we got first question. What's your dollar prediction for this year in terms of where we go? Do you have one with the new Fed chair? Any clarity, or where we're sitting at 97.50 right now, and that's the question out there.
That's a great question. Well, you know what? To be quite honest with you, I think that if you're looking at where we're going to be 12 months from now, I would think that you're probably going to be slightly lower, but I wouldn't say drastically lower. Just like I said, there's divergence in the markets. So a lot of it has to do with what kind of central bank actions we have moving forward in the course of the year, and especially if they have a lot of quantitative raising. If the ECB and now the BOJ, that's going to be an interesting bank to watch moving forward still. But when it comes to them, the Japanese don't move very quickly when it comes to central banks. I would say that before they do a rate hike, they'll do some quantitative raising. And that's the thing you really want to watch, because that's going to influence the interest rate markets, especially the short terms. And should that occur, then you're going to have some definitely influences on those currencies as well, meaning that you'll have pressure on the dollar, because we're going to be most likely, I mean, we already know that the administration is going to be leaning on the Fed to be cutting rates, and as we move forward through 2026, especially once we have the new Fed chairman. So yeah, I think that you're going to probably see the dollar index lower. As far as how much lower, I mean, I can give you a ballpark. I mean, if we go on a monthly basis, I think you could probably see the dollar index back to, I mean, maybe around the 92 even area. But that's not really saying that much. I mean, that's going back to, last time we were in that area, we're looking at back in 2021, and that was, we know what was going on back then. And that would also be the bottom part of the range that the dollar index has been in for the past now 10 years. If you really look at it, the low, I mean, we crossed basically the 88 barrier back in 2014. So now we're in 2026. So even if we were to get back to that level, I mean, it's not like the dollar is going to be that extreme. Is it coming off of its highs? Well, yeah, but that's not that big of you're looking at a 20% correction off of its highs over the course of 4 years, 5 years. That's not a big deal when you consider what we've gone through when you start out with, from 2020 just to 23, let alone from 23 to the beginning of 2026, right? I mean, we've had a lot of, action as far as globally, let alone within our country. So I think that the dollar, it spiked up to a nice high level. This is also very, very good for us as far as our exports and for the economy moving forward. It helps strengthen the infrastructure for our companies. So I think it's a good thing that the dollar actually even falls back to those areas.
You make some great points, man, and I've talked about on this chart. You say 90, and boy, that's hanging out there for sure. And what's amazing there is that was also, Teddy, we had a high of like in 2004. That was an area of a little bit of resistance. That's kind of where you topped out in 2005. That 90 area, we got back up there in 2009 almost. You got back up there almost in 2010. So that area, in terms of a technical area. But when you look at the dollar on a longer-term basis, and we were just at 100, right? Now we're under it at 97, but we're just at 100 in the middle, in the middle of 25. The only time that the dollar is actually weaker than about 100, stronger than 100, right? The only time going back to like 2002 was just that period of COVID. 2022, 23, and 24. Outside of that, most of the time of this entire monthly chart, you are well below 100. So I would agree that it's not exactly just some, massive destruction. Now, weakness versus strength. But,
right.
There's only a few year period there, going back almost 25 years, where the dollar really has been stuck under 100. And if it's oil, and we're at 97. So, yeah, that's not exactly... And, right, to make the point, because I don't think a lot of people would appreciate that. You get recency bias, right, Teddy? It's like, man, we're down from 115, we're at 97. It's like, well, we were under 100 for a very long time, folks. And things, hey, Hey, what do you think about oil? That's the next question. What's your take on oil? I know the Tigers and Tigresses, they love your takes on oil. Oil, you talk to us about the U.S. We're a producer, of course. You talk about Japan. They're a consumer, how that impacts. What do you think about crude? We've got a little bit here.
Yeah, we have a bid. I don't like it at the prices it's at. Nobody does. But I still think it's top heavy where it's at right now. I really do. Nice. I don't see it. I don't see it climbing into the 70s or anything like that. There's really no. I just would. If you're gonna try and be a bull in this market, I would be very cautious with it, and I make sure you're somehow covered very quick. Or keep your stops tight. Because I could see oil selling off in a big way where it wouldn't be. I mean, for maybe let's say we even spike up to like 69, even we're to spike up at $70. If we hit that area, we're coming back to where we are right now very quickly, and I think we're more likely to go down to like 62 or $60 than we are to push $70, just as far as on an odds basis.
Appreciate the take, man. Hey, let me ask you, did you see any of that outdoor game between Tampa and Boston with a goalie fight and an overtime game?
I did see a little bit of that. Yeah, how about that?
How about those games, man? I know you're a huge hockey guy. It was pretty cool. And who do you got? Who do you got in the Super Bowl, Teddy? You got to pick the Patriots, the Seahawks. Who you root for? Anybody?
I'm going for the Patriots, and I can't believe the line hasn't been. I can't believe the line hasn't moved, but I figure if it goes to +5, I'm jumping on it for the Patriots. But I'm going to go with the Patriots anyway because I don't see them going.
That's a trader right there, folks. Risk reward, right? It's capitalizing on some value. I love it.
Look at the money line; it's insane.
I love it. Teddy, thank you so much. Folks, check out the Tiger Forex Report, those couple great webinars under the Services tab. We'll talk to you next week, Teddy. Thanks so much.
Take care.
Take care. We're coming back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We take a look at the heat map. AMD down 12.6%. Palantir. So after some big numbers. Okay, check out that give back. Below where you went into the numbers. You trade lower yesterday. You continue that run today. You just dropped $10, man. You're off 8.2% right now on Palantir. What is going on with Palantir? They're selling no matter what. Watch out for that one. AMD off 12%. Some of the software stocks continuing lower. You got Salesforce. So they were down 3%, I believe. We jump over to Salesforce. Yeah, look at this run. It's not stopping. Down by 4% right now. You know, there was this theory that the stickiness Okay, let's jump over to Blue Owl. Yeah, down another 3%, testing the lows. That there was this stickiness, okay, recurring revenue. The stickiness of recurring revenue going to be very difficult because people hate change, okay? They do. One of the things that we all struggle with is getting over that barrier of change, right, and getting stuck in routines. Habits can be good and they can be bad. Change is very difficult at times, but guess what? AI is going to force that adoption quicker than we all thought. And some of these technology companies, my goodness. You jump over the S&P 500, Apple's up 3%. Look at this. Lilly, their numbers up 7.5. Google. So again, tonight after the bell, we get Google numbers. Alphabet, tomorrow we get Amazon. Let's jump to Amazon. How we doing? Down 0.5%, little selling there as well. NVIDIA shares off 1% right now. Jump back to gold and silver. Gold up by 1.8%, up $88. Pretty remarkable, though, Bo, folks, to keep, if you're not watching this market, just understand the risk. And, man, it's a heck of a bounce, and we'll see if we can get some volume behind it. But gold just traded down $100 from where we were early this morning. Doesn't feel like it, right? Doesn't. We're above 5,000. We just traded down $100 like nothing. 5,019. Continued volatility in that metals market. S&P is negative by 1. Remember, Google after the bell, Amazon tomorrow. We got Qualcomm after the bell tonight as well. Snapchat, watch out for that one. Folks, thanks so much for tuning in. Stay tuned. Basil did his program live at 8 o'clock. That's coming up right now. Steve Rhodes live at 11. Fast Market at 12. Larry live at 1. I'll see you at 3 o'clock, folks. Have a great Wednesday, everybody.